Good morning, everyone. Welcome to the Daily Trader with Kevin Hincks. I'm Kevin Hincks. I'll be looking at two high-profile names today that are moving all over the board. We're going to look at Tesla, and we're going to look at Palantir. Brief discussions about the company, and then a paper money trade in both of those. So let's get right to it. First and foremost, Tesla. This stock, as of 9:30 Chicago time this morning, already has a $6 range today from $14 range today from $461 up to $475. So this stock moving, since the election, up about 90%. Up this year, about 93%. So it hit a high of $483.99 yesterday's trade. So this stock is all over the board. So how do you play for a stock that's all over the board? Well, if you can play bullish, you can play bearish based on your opinion, or you can play movement versus lack of movement. You've seen this on this podcast many times here where we're playing for movement in either direction. We're not picking a direction for this stock. We're just looking for movement. And so we go out and we measure the expected moves. Today's paper money trade is in the January 3rd expiration. So if you think about it, it's about 16 days till expiration. Measuring the expected move in 16 days, $64 is the expected move, both up or down over the next 16 days. You can get that on the right-hand column of the Thinkorswim platform. What we did, we went inside that, put on a long iron condor. That plays for movement. It's a long vertical spread on the upside. It's a long vertical put spread on the downside. So in this case, we bought the 490, 500 call vertical. Only about $25 on the upside. So a relatively short move on the upside if it gets to $500. And on the downside, we did the 420, 410 put vertical. So if you see it on the downside, it's a little bit bigger move. Now, can you adjust those strikes? Yes. The most important part of this podcast is the strategy that we're teaching you. You can change the strikes around. Now, this paper money trade that has, it's frankly less movement on the upside that it leaves and more on the downside. We put it in about $5.25. It's trading about a dime higher than that right now. And here's what you're looking for. Big movement in either direction. It's very similar to what you're getting, frankly. And you're looking for a move. Either of these spreads can go to $10, right? You spent $5.25, $5.30, wherever you put this trade on, with a chance for one of these spreads in one of the other direction to go to $10. Now, what's the risk? The risk is the debit paid, whatever that is. It's $5.25, is it $5.35? That's the risk on this trade, and the risk appears when this stock stops moving. If it stays in a range between $495 and about $415, that's where you would lose money. If it goes through those, that would be up in that level, those far right or far left levels there. So this is a risk-defined strategy where you can basically almost double your money if one of these spreads goes from around the $5 level of the iron condor to $10 on either side. The risk is lack of movement. You're playing for movement on this one. Okay, there's our trade in Tesla. Now let's go to our second one, and that is Palantir. Now, Palantir is an interesting name because for people that don't know about that, Palantir is a name that you hear things like ERP, Enterprise Resource Planning. You'll hear things like AIP, Artificial Intelligence Platform. What Palantir does, what its niche is in artificial intelligence, is it takes in all the data and helps you with decision-making. It automates and it manages the data for your decision-making process. Now, the original spoof on Palantir was that it was only for government, only for large companies. Well, this stock has rallied because they've adjusted that to small and medium companies. And that's why they've got things like AIP boot camps where they're teaching medium and small companies to use their systems, their AIP, artificial intelligence platform, to help them make decisions. So its niche is it takes the data and helps in the decision-making process. Now, as you know, based on that, this stock in the last 12 months is up 318%. Last 6 months, up 215%. Everyone's talking about Palantir. However, the valuations are extremely high in terms of valuation. So how do we look at a company like Palantir that is run so far so quickly? We looked here in something in the put calendar paper money trade. We went out to the January 17th expiration. That's 30 days. So you've got a full month on this long side. And we bought the 70 put, just, 70 put, about $5.25 lower than where we are now. So you're looking for a slight pullback in Palantir. Then we went out to next weekend, December 27th, and sold the 70 put. Remember, the calendar spread is similar to what we talk about with the diagonal, but same strikes. If it's a calendar spread, they have the same strikes. You're buying further out, selling shorter with the same strike. If it's a diagonal, it would be different strikes, right? An embedded vertical, either long or short. That makes up the diagonal spread. So the Palantir 70 put calendar trading about $1.95. It's trading pretty close to there, about $1.92, $1.95, right in that range. You're collecting theta. Your short deltas, about 10 short deltas, collecting theta, and again, long vega. What the advantage of that? On the downside, if you think Palantir's implied volatility would go up on a downside move, you are long vega on this trade. So you get the directional play as well as the vega play if vega were to implied volatility were to pick up. So the risk on this trade, the debit paid, just like on the Iron Condor, the debit paid is the risk on this trade. And you're looking for a move towards the $70 strike. How does it lose money? A move away from the $70 strike or a move through it on the downside. Any big move. This spread, unlike the Iron Condor, you are targeting that $70 strike. So you want a movement towards it. Doesn't have to be exactly there, but you want to move towards it. And by the way, the fact that this is a 30-day versus the D's 27th is a 9-day, you do have potential to extend duration on this trade and lower the net debit, which currently sits at 195. When you lower the net debit, you also lower the break even on this trade. So 2 trades today. Long Iron Condor in Tesla playing for big movement in either direction, and a long put calendar in Palantir playing for a slight range-bound move down towards the $70 strike. That's Daily Trader for today. I'm Kevin Hincks. Have a great day, everybody.